At the most interesting, eye-catching market insights of the week. That's how I rock and roll. So these are the things which really caught my attention this week. Look at this. They're the January statistics for the S&P 500 and the Nasdaq and the Dow since 1950 to 2021. Don't worry, I did not compile this data. The interesting, sexy people at Stock Traders Almanac did. And this is what they found. You're almost twice as likely, to go up as you are down, which means I'm pretty happy and relaxed in January. In fact, I've been a net buyer of stocks since I was 11 years old. The average percentage gain is best in the Nasdaq. That might be weighted more recently. And followed by the S&P. Well, you can see it there anyway, can't you? So I assume you can read numbers. But look at this. This is now, let me tell you what's going to happen in 2022. A load of people are going to write tons of reports mentioning the word Metaverse and Web 3.0. NFT, pretty much last year already. Cryptos, oh my God, you're so last millennium. And they'll change their biogs as well to reflect the fact that they are absolute experts on the Metaverse, NFTs, and Web 3.0. And probably delete crypto now because it's not as sexy. So watch out for all that faddishness. More importantly, I don't know what you're all smoking, but when I did a poll on my LinkedIn, 681 people voted. They think the S&P 500 will be up 10 to 20%. If it is, my pension will be up probably about closer to 30 to 40%. If it's up over 20%, I'll be up over 50%. And if the market is up 0 to 10%, my pension will probably be up 20 to 25%. If the market is down, then my pension will be anything from down to up only 10%. That's how it works. Okay, so if you can give me a fair wind, I'll be happy of it. Now, you might want to pause this part. The cheapest stocks and shares are ISAs. And it gives a whole range of different providers. And what worries me about this is some are 20 times more expensive than others. There's a 20-fold difference between the cheapest and the most expensive. So again, have a look at these and do invest and do save. And I'll tell you why in a second. You need to invest and save sooner than you think and a lot more money than you think, or at least get better returns than you think. If you're on my Great Investments program, I've uploaded Casinov's 2022 Outlook. That sits alongside Bloomberg's 2022 Outlook and Goldman Sachs's, okay, and Morgan Stanley's and a whole bunch of others. So if you're on the Great Investments program, that's where it is. 2022 predictions, bingo scorecard. Okay, now this is sourced from Goldman Sachs, Credit Suisse, Deloitte, Merrill's, Reuters, IMF, Forrester, amongst a whole bunch of others. Bloomberg, LinkedIn, Fortune Magazine, CNBC, Forbes, Barron's. I mean, pretty much every single source. What keeps coming up? What they've done is they've analyzed 300 articles, white papers, podcasts, interviews. What keeps coming up? Well, the thing that keeps coming up the most is interest rates will go up. It doesn't take a bloody genius to get paid the big bucks to predict that one. And there'll be increased volatility. Okay. Inflation slowly eases off, which seems somewhat inconsistent. Well, maybe you think it's consistent depending on how quickly you think interest rates work, with interest rates going up. Modest gains for equities, 4 to 5% global GDP growth, bullish on European and Japanese equities? Seriously? Again? You think? You've been playing that tune for the last 40 years and... Okay. Meta's Metaverse plans fall flat. I think that's more wishful thinking. Social commerce picks up. There's a whole bunch of stuff. I'm going to read all of this, but the ones which sort of caught my eye, China will have a rocky start to 2022. Well, certainly if how good its spies are is anything to go by, it's already had a rocky start to 2022. Geopolitical tensions will flare up. You can tick that one every single bloody year, can't you, really? Glowing influence of ESG, well, we've had that already. You'll be hearing a lot more about NFTs and Web3. I think you'll hear a lot more about Web3, maybe a bit about NFTs. I know, NFTs are just the greatest, wonderful, most amazing thing, and they'll replace money just like crypto did. Sorry for my cynicism. It comes with age. Okay, so what's next? Commodities, periodic table of commodities, 2021. Guess who did the best? Coal. Why the hell would coal do so well? Well, the reason is, the irony and unintended consequences is when you say you've got to limit coal by a certain time frame, which is very soon, everybody accelerates their plans. And they dump the same amount that they would otherwise have dumped over a longer period of time, which would have given the environment to absorb that. They dump it all and give a chokehold in a very short space of time. Instead of having annual caps, we decided to have timeline caps. So instead of saying you can only produce so much, which the environment can absorb, we decided to say, no, do as much as you want, just get it done by next year. Anyway, that's why coal's up. If there's something which seems to be consistently up, and certainly palladium, I mean, I know last year was an awful year, which suggests, given the number of years it tops the market, palladium might be worth looking at yet again. And it's not a theatre in London, for those who don't understand comedy or commodities. Then what have we got which is consistently up? Well, by the way, if you think you can find a pattern in this, you're psychotic and you probably need some psychiatric help, or you already work in finance. The retirement spending smile, Morgan Stanley Wealth Management, and I'll do a detailed analysis of this. What they're saying is, of course, in your later years, you're living longer, so you're going to need more money because you're going to be in a nursing home and those nappies ain't cheap. 65 to 75 in your basic active early years, you after retirement, you sort of do spend a bit, you go a bit nuts, and then you have a quiet period. Bottom line is, you are going to need more money, and you're going to need it for longer, and you're going to need it sooner. All right? So one way to do that is start saving sooner, start investing sooner, and start saving more. The other mystery factor is trying to improve your returns, which usually means just don't give it to fund managers alone, or at least learn what you should be asking them so they perform better. Otherwise, the fund managers and their children are going to be having the retirement spending smile. You're going to have a frown in your retirement. So be careful. This is from Morgan Stanley Wealth Management. Like I said, I'll do a deep dive on it. If you are on my Great Investments program, I've also put the Metaverse stocks 2022 with upside potential. What those are the 32 stocks held by the first listed Metaverse fund. So we're riding the coattails of however much bullshit's going out there. And they've all received a buy rating from Wall Street analysts, 9 offering upside over 50%. The funny thing is some of those are actually traditional stocks. Well, I say traditional technology companies, which are going to benefit from what's going on with more money going into this area. Should it be going into this area? Not sure. But I don't care. My job is to buy low, sell high. Okay, so I've put all that into the Great Investments program, and you can access it. That's your lot! My word, you people. I know you want more. You want a sequel. You'll get it next week. Follow me on Telegram. Have a look at campaignforamillion.com if you want to see all the stuff that I post on Telegram, and my free investment courses, all the rest of it. Okay, thank you all very much, and I shall see you